It is April 8, 2026, and while the world news is basically exploding this morning, we are seeing something in the financial markets that feels completely surreal even for experienced professionals. While most of you were probably asleep last night, the situation in the Persian Gulf changed completely. The news the whole world had been waiting for is here. The ceasefire in Iran was officially announced last night. But while the media is still trying to figure out the diplomatic details, something is happening behind the scenes that almost every retail investor is either completely missing or fundamentally misunderstanding right now. Let's remember, just a few weeks ago, when Brent oil broke above the psychologically important $100 level, so-called experts were shouting that we were entering a new era of hyperinflation and that the markets were heading for a meltdown. But just look at the raw facts. Today, only hours after the news of de-escalation, the oil price is moving quickly towards the $80 mark. In my view, this is not a coincidence, and it is not just a short-lived move either. In yesterday's video, we already talked about how important this level is. For me, this is the first real sign that the massive pressure in the system is starting to ease. In this phase, a falling oil price is like oxygen for the global economy that was almost being crushed by the weight of high interest rates. Today, in my sharp analysis, I will show you why the ceasefire is, in my opinion, exactly the missing puzzle piece, why we may now slowly start moving away from the dark crash scenarios, which free stocks could benefit strongly from this, and what copper looks like right now. Important upfront, this is not financial advice. It is only my personal view based on the information currently available. So let's not waste any time, let's get into it. If you have been following me for a while, you probably remembered my video from 2 weeks ago. Back then we were standing at a crossroad and I showed you 3 clear scenarios for how the next 14 days could shape the markets for the rest of 2026. We had the worst case scenario of a total blockade of the Strait of Hormuz, the middle case scenario of a volatile sideways phase, and the best case scenario of a fast diplomatic de-escalation. Today we can say this. In my view, we are currently still stable in the middle case. But because of the news from last night, the trend is clearly moving towards the best case. Why do I say that? Because the markets have stopped reacting to every single threat with panic selling. In my opinion, the geopolitical risk premium is being priced out at record speed right now. If oil really drops below $80 in a lasting way, then in my view, at least part of this endless inflation story starts to fall apart. Jerome Powell and the Fed are watching exactly these numbers. A lower oil price means lower transport costs, lower production costs, and that could finally create room for the rate cutting cycle we have all been waiting for since 2022. Up to now, the Fed has been struck in a brutal trap. High inflation driven by energy costs versus a weakening real economy. But in my view, the ceasefire could be a real turning point. Anyone who is still only focused on the fear headlines from the past few weeks may be missing the moment when the path is being set for the next big move higher. If you like these important updates, I would really appreciate a subscription. It helps this channel a lot and makes sure you don't miss any information in this critical market phase. Thanks for your support. Now let's get to the 3 specific stocks that are at the top of my list right now. If we are talking about a world where geopolitical tensions may be easing, but the technological arms race never stops, then for me right now there's no way around CrowdStrike. Over the last 2 years we have seen that modern conflicts are no longer fought only with tanks, but also, and maybe even more importantly, in cyberspace. Even if there is a ceasefire in the physical world, the digital war, in my view, remains a constant. For me, CrowdStrike is the clear leader here. With its Falcon platform, the company protects the critical infrastructure of the world's biggest businesses. So why is CrowdStrike so exciting right now? Because in my opinion, the company has pricing power that is extremely rare. Once the software is in place, it becomes essential for a business. Switching away from it would come with a potentially unacceptable security risk. For investors, that means potentially predictable recurring revenue and margins that could scale towards 80%. If the market now realizes through this de-escalation that we are not heading into a permanent global economic crisis, then these types of growth companies could be the first ones to move higher again. The valuation has been under some pressure in the recent weeks because of general tech fear, but fundamentally, in my view, the story is as strong as ever. The main thing I look at here is free cash flow growth. CrowdStrike is no longer burning cash. Figuratively speaking, it's almost printing it. If you want exposure to the security of global digital infrastructure, then in my opinion, it is very hard to ignore this quality name. For me, this is not a gamble. It is a bet on the backbone of the 21st century. The second stock that acts as a real anchor of safety in my portfolio is Alphabet. Google's parent company has often been written off in recent months, sometimes because of fear around AI competition, sometimes because of regulatory pressure. But let's look at the raw numbers. Alphabet is sitting on a cash pile of more than $100 billion. In a world where capital has become expensive because of high interest rates, this kind of liquidity is, in my view, a fortress that should not be underestimated. While smaller competitors have to fight for financing, Alphabet can simply buy the best talents and the most innovative AI startups. The ad business in YouTube and search is, in my opinion, a money machine that stays stable even in difficult phases. And let's not forget the cloud business. It is still growing at a double-digit rate and is contributing heavily to overall profitability. With a price-to-earnings ratio that is still moderate by historical standards, Alphabet offers, in my view, a risk-reward setup that you rarely see in companies of this size. If rates really fall earlier than expected because oil prices keep dropping, then in my view Alphabet could be one of the biggest winners of the new wave of liquidity. For me, it is the definition of a generational stock, meaning a company I would personally look at with a long-term view. While the crowd is scared of ChatGPT, Alphabet is, in my opinion, quietly building one of the strongest AI ecosystems in the world. If you're not looking closely here, then in my opinion, you are overlooking a very exciting stock. The third individual stock I want to talk about is Amazon. A lot of people still see Amazon as just an online retailer, but in my view it is a major misunderstanding. Amazon today is a logistics and cloud giant with an operating efficiency that has reached a completely new level under Andy Jassy. Margins in the e-commerce business are rising steadily because Amazon has radically regionalized its supply chains. That saves billions in transport costs, and this brings us right back to today's ceasefire and the oil price. If energy costs fall, that will likely have a positive effect on the numbers of logistics giants like Amazon. Every cent less in diesel prices tends to mean millions more in profit for Amazon. But the real star here is AWS. The cloud business is the backbone of the modern internet and, in my opinion, is benefiting massively from the current AI boom. Every company that wants to train AI models needs computing power, and Amazon provides it. What we are looking at here, in my view, is a business with deep fundamental strength that is hard to shake through short-term market volatility. For me, Amazon is the perfect mix of defensive cash flow and aggressive technological growth. Anyone buying these pullbacks now may be positioning for the moment when consumer demand starts to recover around the world as inflation comes down. Once the Fed cuts rates, I believe Amazon stock could benefit in a very meaningful way. Before we finish, we still need to talk about one commodity that often stands in the shadow of gold and silver, but in my opinion is absolutely essential for the global economy of 2026: copper. If this ceasefire moves us toward the best case scenario and the global economy starts picking up speed again, then in my view copper could become one of the tightest materials in the world. Why? Because the entire green energy push, electric mobility, and above all the expansion of AI data centers are simply not possible without copper. A modern data center uses huge amounts of copper for wiring and cooling. At the same time, we are seeing global mine production stagnate. It takes years, sometimes even decades, to bring a new copper mine into operation. In my view, we are heading toward a major supply deficit. For me, copper is the ultimate indicator of a global industrial upswing. While oil may get cheaper because of geopolitical easing, copper may get more expensive because of technological progress. For me personally, that is a perfect contrarian bet. If you want real physical substance in your portfolio that is directly tied to progress, then in my opinion it is very hard to ignore copper. It is the red gold of industry, and in the coming years, if the market setup is right, I believe it could gain a lot of value if rates fall and the construction sector moves again. So overall, the situation has improved dramatically because of what happened last night. The fact that the ceasefire is in place and that oil is moving toward $80 is, in my view, the best signal we have had in months. We are moving away from a fear of a system collapse and toward a phase of rational re-evaluation. Anyone who keeps a cool head now and invests in quality companies while the crowd is still talking about yesterday's headlines, may be rewarded in the long run. Of course, there are no guarantees. In the stock market, it is not about being right all the time. It is about being prepared when the hard facts change. And in my opinion, the facts are changing strongly in our favor right now. The clock is ticking for a new era of real assets and quality stocks. Don't forget to leave a like and subscribe if you want to hear more about these major opportunities. And if you want to know even more, then click on one of these two videos. Have fun, and with that, see you next time. Ciao.